Here at Markets.com, and today is Monday, ladies and gentlemen. Monday, yes, the last Monday of September. Look, this is a quick video preview for the webinar, which is going to happen in a few moments, so do not tune out. Hopefully you'll enjoy this session. We're going to talk markets. We are in the job weeks, in the US job week. This week. There we go. So we have a bunch of data coming out, which could be a market mover, and certainly, of course, Friday's NFP data will be a market mover. But look, about all this and a little bit more in my video. Hopefully you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today's, ladies and gentlemen, is the 29th of September, 2025. So welcome to the last Monday of this month. It was a very quick month for some reason. I don't know, it flew just like that. So we're ready for another month. They'll probably fly as well as quickly as this one. Anyway, I hope you enjoyed September. I hope you're still enjoying September. Look, we have to talk markets, and that's why we gathered here for. So look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to put my usual good morning in the chat room. Good morning, everyone. Good morning, everyone. There we go. So yeah, ladies and gentlemen, I hope you had a fantastic weekend. It was a long one for me. I mean, there were no shows. There was no show on Friday. And this week, there won't be any show on Wednesday because just, it's going to be another public holiday. But anyway, yeah, there won't be a show on Wednesday. So today, stick around for the videos on our YouTube channel. Don't forget to like and subscribe, the usual. Thank you very much for that. For those who already do that, so thank you. That really means a lot. And yeah, like I said, the Markets Talk webinar will be on, well, the one's today, right now, and the other one will be on Friday. So, but in between, we'll have some videos that I'll do about the upcoming events, and we do have an interesting week, I would say. A little bit more maybe exciting than the last one, but hey, again, it's, you'll be the judge. Anyway, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's have a look. Monday. So let's continue with the data, and basically from on Monday this morning we didn't really have much. We had a few speeches here and there. We're getting the UK consumer BOE consumer credit number here, so we'll see how that comes out. European Union consumer confidence final figure is coming out. So look, the number has been on the lower side for a while, but hopefully it can it's so far, I mean, has been on just like in negative territory. Look at this. I mean, it's struggling to get back above zero, I don't know, for like ages, like, right? I mean, so in a way, when you see something like that, then it becomes something of a new norm. So when we cannot really cross zero, and actually let me just mark the zero level here. Okay, let me just adjust this manually. I think it would be better here. There we go. So yep, and when you cannot really cross back above zero, and this is like becoming your new norm, so you then kind of look at something in between, something in the middle here, and something something median. And I would say median we could put somewhere maybe around the -10 mark, because we can see that it's kind of oscillating around that -10 zone. So in a way, again, theory, you might not really do that, but you might say, hey, whatever is like above -10 could be seen as a positive. So, or let's say less pessimistic than than the previous times. Then it's below -10. So yeah, if we kind of stick around below -10, maybe that's. Like I said, look, this is me just trying to interpret this number, which has been in negative territory for like ages now, and it's struggling to get into above zero. I don't know if it will it ever do that. I don't know, but in general, yes, consumer confidence. Yep, it's always on the negative side. It seems like that. Historically, people are not happy about in general. Anyway, look, it's of course it's for everybody to decide. Look, going further in terms of today's data, we have a few speeches here and there, ECBs, Feds, so keep your eyes on that. That's what what could kind of drive the market a little bit, give those little shakeups in a way in the market. So just keep an eye on that, ladies and gentlemen. Jumping into Tuesday, Japan will be delivering their retail sales numbers, so that's going to be quite interesting to watch. I mean, we're expecting an improvement, so a good, decent improvement from plus 0.3 to plus 1. So anything below 1 could be seen as a little bit of a negative thing. Industrial production, we don't have the preliminary numbers. Okay, so nothing major here. Going further, NBS manufacturing PMI. Right. Okay. So Chinese, we have a rating dog, a new kind of agency here, NBS manufacturing. So we'll keep an eye on these. So NBS manufacturing PMI is expecting the number to be still below 50 in contraction territory. So the manufacturing sector, whereas the rating dog is a little bit more optimistic. Saying that actually it can be in expansion territory. So again, look, it's for everybody to decide for what to kind of who to listen to more. But let's say, okay, if we have this rating agency here now, look, that's fine. You can keep an eye on that, just for that extra kind of confirmation or something like that. So if we do see the number, let's say, coming out above 50 and the NBS comes out above 50, then maybe we can say that, hey, the market is kind of pretty much aligned, so they understand that. Yeah, so again, like I said, it's up to you. Again, just in general, keep your eyes on. Probably the best thing is to never try to predict the market. Try to react to the market in a way. Okay, look, okay, the word predict, never try, the words never try to predict, it's kind of, could be debatable here. We're all trying to predict, right? But in a way, when these big events are happening, don't try to be careful about it, because what you could get, of course, is like volatility, spikes up and down, and, if you have a tight position, then it could, trigger your stop loss. So, the drill. So, just kind of, like I said, just wait for the, the market to kind of settle, and then you can do something about it. Going further, Japan, construction orders, housing starts, so it's something coming out from that sense. In that sense, RBA press conference. Oh, by the way, silly me. RBA interest rate decision. There we go. 3.6. That's what we're expecting. So if you are trading something Australian dollar related, so yeah, that might still be a little bit on the negative side for the Australian dollar, unless the other currency is the weaker one, So again, like I said, it's we're not expecting any major shifts, and I think the central bank remains with the same position that they don't want to go, they don't want to jump around too much. Let me just double check something here very quickly. Let's see what has been said during the last, during last time. Look, I mean, we know that last time in August they did go for that 25 basis point cut. So I think that what they're going to do is like going to do the usual, take a waiting stance, like take a wait and see approach. And just kind of see what's happening, so how it's working out. In general, Australian inflation is still manageable. It's, around what I can see here, 2.1. So it has been actually drifting lower. So I'm talking about the quarterly number, not the monthly one, but the quarterly number. It's the because the monthly CPI indicator that came out last week, if I'm not mistaken. Let me just double check. Yeah, that kind of shot up a little bit. It went to 3%. However, the quarterly one sits at 2.1 and has been drifting lower. But the next one will be at the end of October. And to be honest, something tells me I think it's going to be a little bit on the higher side. So this is where the central bank is kind of trying to, assess the numbers to see what's going to happen there. If everything is going to still remain under control, because look, Australian inflation is between the target is between 2 and 3%, so they're still within target, and yeah, it's okay for them, Anyway, so we're keeping an eye on the interest rate decision. Of course, we're keeping an eye on the market reaction on Tuesday. If you're trading something Australian dollar related, so just keep an eye on that one. Going further a little bit into Tuesday, we have a bunch of German data coming out. You can see here on the calendar, unemployment number, that's going to be important to see. For now, the forecast is 6.3, but look, I said it before and I'll say it again. In terms of German and European overall numbers, they're kind of in line most of the time with expectations. The interesting bit comes in when you have how to say it, a figure that is away from the the forecast, when you have the disbalance in a way, right? When the figure is totally away from either to the upside or to the downside, it doesn't matter. Now that's when the interesting bit comes in. That's when we see a little bit more volatility. So long story short, for now we're watching the German data, but I'm not really kind of expecting a lot of surprises in there. We have the German inflation number coming out as well. It's expected to tick up a little bit by just 0.1%, so that's okay. Christine Lagarde apparently is speaking as well on Tuesday, so a little bit of euro action there could happen. Going into further data. Chicago PMI, CB consumer confidence, and JOLTS job opening. So if you don't know, we are in the US job numbers week. So we are going to have JOLTS on Tuesday, Wednesday we're going to have the ADP, and on Friday we're going to have the long-awaited NFP, but I'll get to Friday in a bit. So keep your eyes on the data here on Chicago PMI. Here expected to be on the lower side, consumer. But now JOLTS are expected to come out lower again, I think, if I'm not mistaken. Yep. So you can see the trajectory here, and this is a bit of a, I would say, like a bummer here. This data, I mean, look at the numbers here. They have been declining. It's like 2022, we're like still, somewhere around 12 million. Now we're like almost half of that, and the economy is booming in a way, right? So, right, I'll talk about the jobs in general when I'll get to the NFP numbers for Friday. But yeah, in general, the trajectory here, yep, it's not great. Let's put it in simple terms. Going further, yep, that's kind of it for Tuesday. Wednesday, we're going to get... right, okay, so Australian global manufacturing PMI figure. And, okay, those guys have a little bit of a problem here. The numbers are actually declining a little bit. So, yeah, it's the... this big global manufacturing PMI is showing the number getting closer and closer to contraction territory. Let's see if that's going to be the case. Japan, Tankan, Large Manufacturers Index, so you keep your eyes on that as well. It's quite important to see how the state of Japanese economy is doing, or the manufacturing sector is doing. United Kingdom, housing prices, nationwide housing prices, so we're going to see what's happening there, because again, we are kind of noticing a little bit of a decline in a way in housing, in house prices. Not much, but a little bit. So yeah, then we have a bunch of other data here. European Union inflation numbers, the expected ones, by the way. These are numbers here are going to be quite interesting to watch. So how the flash comes out, because again, that's not the final one. The final one, let me just confirm when the final one will be for the euro area, and because last time it came out at 2%, the year-on-year number. So the next one will be on the first. Wait, so that's the flash, but I don't see the. Okay, so that's going to be somewhere in the middle of September. Yeah, I don't know the exact date, but maybe like 16, 15, 18 or something like that. Need to double check. So check the economic calendar. Like I said, it's in the teens. That's when the final figure will come out. But of course, it will be interesting to see what's going to be the flash figure here. White Castle, hey, Mister, hi, hello, how are you? Tell me, how are you? And what's on your mind today? By the way, like, what are you trading? What are you trading this week? What are you keeping an eye on? Let me know. So going further into Wednesday, ADP. Okay, look. Forget about everything apart from ISM. I'll get to that in a bit. But ADP, another problem. Another problem here, and another problem here, and basically why I'm saying this, there's a problem, because look, the number is kind of very, very close to that negative zone here, below zero. We were here below zero already, briefly, so that's a little bit of a concern. I mean, some of you might say, oh, but like, isn't this like going to be a reversing point to the upside? No, it doesn't work this way. This is not kind of, as I said several times, you cannot really apply technical analysis on this. You have to be like, it's a trajectory here. It's like until we get some sort of like a political shift here or something like that, and in general the market, then yes, then we can see some sort of a shift here. But at the moment, yeah, we're expecting, what are we expecting? Another lower number. Great. Another lower number, and it's an interesting moment here. White Castle, we're going to wait until 4th of October for big and clear direction for Japanese yen. Let's share your thoughts. 4th of October. Okay. Look, Saturday. Am I missing something? Am I missing something? Remind me. Remind me, please. Okay, so look, White Castle, honestly, please do remind me again. 4th of October, what's happening? Am I missing something or something like that? So, okay, I know that there's a festival happening, apparently, okay, so yeah, in terms of Japanese yen, look, I'll tell you my thoughts on the Japanese yen in a bit, but you got me thinking here, honestly, and that's a good thing. You got me thinking, because I thought maybe I'm missing something for the 4th of October. Anyway, maybe you can be the judge. You can tell me, like, what's happening with the 4th, why we're waiting until the 4th of October. Let me know. Anyway, so yeah, coming back to the numbers here. Look, we have some celebrations here in China, and that's going to be happening on Friday. But look, coming back to Wednesday, still haven't finished with the Wednesday ADP. Right, this is what we're watching. This is what. Oh yes, sorry, election day. Right, okay. Apologies for that. Sorry, totally blocked that one out. Look, in terms of that, like I said, we'll get to the Japanese data, Japanese yen in a bit. I'll talk about the forex about that. Look. For now, looking at the data here, the ADP, the US data, it's, like I said, the problem here that we're on a decline. The problem here that it's, we're not really creating more jobs. Nobody's like firing, but there isn't much creation of new jobs. So this is the worry, and I think that this is where the Federal Reserve is trying to go and fight, cut interest rates, and we know that we're going to get more cuts. We know we're going to get like one cut in October, one cut in December. So yeah, there we go. So this is what we are expecting right now, and 2 cuts by the end of this year. To me, it seems like more like pleasing the White House, but anyway, that's another topic. So look, in going further, ISM manufacturing PMI. Now this is an interesting one. So we are expecting a little bit of a higher number, but still the number is in contraction territory. So in a way, not good for the economy. That said, it's because it's close to 50, because it's close to 50. So somebody might say, "Oh, but actually, it's a bad thing. We cannot really get out of contraction." But that actually could be, like I said, could be a good thing, because that encourages the central bank, the Federal Reserve, to go for those cuts, which are seen as a positive for the stock market. Just in a way, like, you're trying to boost production, you're trying to boost lending, so that there would be more production in the country, and blah blah blah, and hiring, and the whole chain like that, right? But like I said, if it would be a number, let's say somewhere below, like around maybe 45, somewhere closer to that side, I mean, that would be a worrying sign. Maybe the two cuts would not be enough. So for now, if it's like somewhere just a little bit fractionally below 50, maybe the two cuts are still okay. So that's why the market might not see this as a major big problem. If the number comes out somewhere, let's say around the forecast, 49, something like that. So it would still be okay. It's a bad thing, but still okay. Going further into the economic calendar here, Japan Thursday. So nothing major here, to be honest. Trade balance from Australia, okay. A very low number we're expecting here on the trade balance. Oof, interesting. Consumer confidence in Japan, 35. Yep. Then we have the BOJ's Ushida speech here. Inflation rate from Switzerland. So if you are trading something Swiss related, so please keep your eyes on the inflation number, because Swiss inflation has been on the lower side in a way. And we know that their central bank is kind of keeping the rates at zero. They're not really shifting much, and they don't want to go into negative territory, but they're trying to boost lending. They're trying to boost a little bit more inflation here, maybe just to show that there is some sort of growth, because this might be a struggle to show growth. Again, it really depends on which side you are. Somebody might see this as a good thing. Somebody might see this as not a very good thing. So for example, if you're buying, you're getting a loan in Switzerland at a very low rate, and then you can put that money somewhere else, and just without doing anything, you can get your interest. But anyway, that's theory. That's theory. Of course, you have fees and charges and everything like that. And interest, in general, yes. I mean, it's not really, like I said, it's not really that straightforward. Right. Initial and continuous jobless claims from the U.S. factory orders. That's where we're going to get on Thursday. So keep your eyes on that. But then, of course, the main numbers we're waiting for on Friday. First of all, Friday is going to be a very exciting day in terms of economic data. That's going to be the first Friday of October, also, the S&P services and composite PMIs, the final ones. We're expecting a little bit of a lower number here on the service side. Unemployment in Japan, we're expecting an increase from 2.3 to 2.4. Yes, not a good number, but in general, 2%, 2.4% unemployment, that's quite not bad. So China will be in celebration mode. S&P and then we have the Japanese composite and services from the S&P Global, the final PMIs here, and those are expected to come out a little bit on the lower side. BOJ Governor Ueda speech. Yep, we'll see the market reaction on that one. Going further, we're going into composite and services PMIs from Germany, from the UK as well. PPIs are coming out from the EU. I mean, look at this. I mean, busy morning already. Lagarde's speech we have here in the calendar. We'll see how that plays out. And of course, we're jumping into NFPs, the US NFPs. So look, with the NFPs, average hourly earnings kind of expected to come out the same. Non-farm payrolls, we are okay. Look, somebody, great, a better number than the previous. Wonderful, right? But sorry, but this is not good in general. Look at this. I mean, let me zoom in here a little bit. Look at this trajectory. Honestly, it is just massacre here. I mean, we have been at levels. Why is it like this? Okay, no, it's not going to shift. So we have been at levels back here, back, like around a million. That was back in like 4 million. We were in 2020. Okay, then COVID hit in a way, but there was COVID. But then, yeah, the economy is still booming. People were recruiting. But now the problem, in my opinion, is AI. The problem, again, look, I'm not saying that I'm against it or something like that. No, it helps out in certain ways. But we have to accept the fact that there comes, there are bad outcomes in a way, right? And again, the contributor to this whole job loss, in my opinion, is AI. Why? Because the entry level jobs are no longer needed, to be completed by humans. So you need basically a specialist who will monitor, those lower skilled jobs, right? I mean, what normally were done by human beings now, you have an AI, a chat bot or whatever, sounds like a grandpa, but that's what you have right now, right? That's where we're shifting to. And people say oh, but you can requalify in a way. Yes, you can. There's a lot of, like I said, office jobs that are getting slashed. We saw Lufthansa removing how many, 3,000 or 4,000. How many? Let me just remind myself. This morning I saw they're slashing jobs. Where's how many? Lufthansa jobs. 4,000 by 2030. And they're planning to cut 4,000 by 2030, and most of them, of course, are going to be admin. What I just said. This is what you're going to do, So this is what you're going to remove. You're going to remove those data input and blah 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 and stuff like that. I'm trying to find a little bit more info here, but yeah, in general, that's the problem. That's what we're moving towards to. So. Okay, look, if somebody's telling me that they're going to have, we're going to have some sort of a payment from the government, just going to be paying you to, to do kind of stuff and stuff like that. But look, it's not economically worth it, right? So I think that eventually, we're going to get some sort of a bigger shakeup in the economy, in the world. And I think that, and in general, in my opinion, AI cannot really do all the jobs, right? I mean, you need to, everybody's now talking about plumbing, electrician, and something like construction and stuff like that. But we can supervise the AI. Probably that's going to be the path for now, until AI is going to get even better. So again, like I said, that's what, and in general. I think that the only answer for everybody will be for military or something like that, because that's. But then even then you need to be careful, because AI will will be fighting as well. Anyway, sci-fi. Look, ladies and gentlemen, let's go back into economic calendars and stuff like that. So we're looking at here, like I said, a number 39. It seems like now we're in this new norm where we're struggling to surpass the 100 level. And to be honest, I really doubt that we're going to surpass the 100 level, 100,000, 100K. It's really something that I don't think that is, judging from what's happening right now, I don't think that this is where we're heading. If not below zero. I think that we're heading below zero. I think that eventually we'll hit that mark. This is what I have here. So we're not far from that. So hey, I'm just basically waiting to see the number in negative territory. That's what I'm waiting to see. And then maybe the stock market could actually reverse a little bit back down. Unemployment rate, 4.3. Okay, as expected. And then we have some Canadian numbers, composite services numbers, the PMI numbers from Canada, same story from the US as well. So keep that in mind. ISM ISM services PMI, that's what I'm looking at as well. We're still expecting to keep this number at above 50. That's great. But in a way, surely we're getting very close to 50 as well. Ladies and gentlemen, let's jump into the charts. Nikkei, looking at this one, looking at the picture here, we're seeing a little bit of a drift lower, which is fine. Which is, look, it's a nice little correction after we hit the all-time high. Let me just show you what I'm talking about. So this, look at this. We I have a lot of data here. We are hitting the, we overcame the 1990 all-time high. And look, if we're analyzing it from this perspective, right? Eventually this will have to go down. I don't want to be, whatever comes up must come down. So we have, whenever you have like a parabolic move like this, look at this. We have been rallying, and this is like, at the end of 80s, in the beginning of 90s, we were like rallying, and then look, a major crash comes, boom, like everybody, panics. Look at the stock market of Japan. This was a tragedy, like honestly, and it continued all the way to the decline. That's what's interesting here. The decline continued all the way until the crash, the final crash. So for a decade, actually, for a decade. We have been almost a decade. Like we were in this negative territory, yes, for a decade. I mean, what I'm talking about. And then it started recovering, and now we're at this point. So if we're, looking at this from this perspective, I'm sorry, but this doesn't look very good. This looked good. This does not look good anymore. Yes, we're at all-time highs. Congratulations. What are you going to do with that? Are you going to buy still more? Yeah, you might still buy. You might enjoy it, maybe a ride towards the 48,000 here. But the question is then, are you actually going to, continue buying here? That's my problem. So this is where, okay, then in White Castle with the elections, and I think that whoever's coming into power right now, whoever's going to be, doesn't matter, honestly. Like at this point, I think it so doesn't matter that they will. They might do the things here and there. Of course, they will say that, let's say, for example, they do some sort of like a policy or, something that they screw up, like they raise fear and everything like that. In my opinion, that's like just perfect timing, because, I think that in general, the market has already everything established, and when it wants to go down, when it just finds a circumstance or just finds an event to blame it on that, although maybe the plan was already to let's say to crash it next year in February or something like that, then or maybe March or something like that, then we can still rally up until then, or let's say when March time Jerome Powell leaves. So, and then let's say maybe this is where they will say, oh, the market reacted negatively to the fact that Jerome Powell left the Federal Reserve. But like I said, something like that. So that's what I'm saying. That's why it's very subjective. And whenever, let's say, you have these political shifts in the economy, but it seems like those come in when there is some sort of like a correction needed or some sort of a boost needed. And it's like. Again, it seems like it's always perfect timing. So long story short, for now, looking at this chart, sorry, I'm going to be a little bit more on the pessimistic side, because we might see another rally, we might see a good push higher, but now for me to go higher, I would need to overcome the current all-time high. If we cannot overcome the current all-time high, I'm not really getting comfortable with the upside here. I'm looking at this. This looks bearish to me. But again, looking at the daily chart, for me to start getting a little bit more bearish, probably I would say we need to kind of maybe wait for a break of this upside line, something like that, and then we could do something about it. At this point, I'm just observing the price action, and look, if we do fall below the 43,876-ish, look, this is a number, it's not specifically exactly that number, it's more of an area. If we do fall below this area, yes, I'm leaning towards the downside. Jumping into Shanghai Composite. Now, this is what I want to look at as well. Let me just jump into it. Now, this one still has some room for some upside. Look at this. Look at this, where we were back in 2007. Boom, look at this. We were booming, and then financial crisis hit. We then collapsed, and we then rallied again in 2015, 16, and then we collapsed again. And now I think that we could go for more upside. We could see, moves like these here. Like we could see a move towards this downside line, but Wait, sorry, we already are here. We're already here. So now the question, okay. Now in that case, a question to me, like, can we break this downside line? If we can, this is a monthly chart, by the way, ladies and gentlemen. If we can clear this downside line, great. Straightforward, I will go for the highest point of 2015, which is around 5,178 zone. But again, look at this, where we are. Like I said, we are near key resistance. I mean, this, from the technical perspective, that is just spectacular. That is just amazing. And okay, I mean, you know, like I said, I do sound like a pessimist, but there has to be some sort of logic, right? I mean, whatever comes up, I'm probably, my motto is whatever comes up must come down. Very simple. And I really don't want to, you know, maybe we can draw it this way actually. So I don't want to be, like I said, I don't want to be that guy who's going to be like spreading bad news and everything like that. But I will say that why my camera is not working. Guys, can you see my camera? For some reason, it seems like it stopped. Let me just double check why my camera seems to have frozen. There we go. Okay, can you see me now, ladies and gentlemen? I hope you can see me now, because I just noticed that my camera was like frozen a little bit. But look, hopefully now it's working again. Monday morning technology issues. There we go. Look. Coming back to the situation here with the Shanghai Composite. So if we can overcome this, that's great. We can then maybe start targeting the 5,000. But at this point, the 4,000 is the kind of the more attractive option. The 4,000 is, like I said, we could get, like, what we could get is like a rally, a spike towards the 5,000 or 4,000. Test that 4,000 and then drift back down, you know. So this is, like I said, this is something that could happen. So keep that in mind. We're at a very critical spot right now. Looking at this daily chart, you can see that we're forming something of a possible ascending triangle, ladies and gentlemen. Look at this. This is just spectacular. This is just very, very nice, I would say. And okay, look, I mean, if we can clear this, we can clear probably the downside line as well, the one that I showed you on the monthly chart. So we are at a very interesting, important area right now. Let's see if we can clear that. Certainly, we need some sort of maybe positive news, like, you know, something that China is like developing even further. Like, you know, if we know the Chinese auto sector is really working good right now. So maybe that could give additional boost. And look, I think that if we suddenly see it's like some sort of like news, like an improvement in the housing market, I think that that's where you know, the positivity could also come in. Let's jump into Hong Kong's Hang Seng index, and there we go. Also, let's have a look at the monthly chart. Look, this one has potential still to go higher, and I think that, okay, we're not at all-time highs. All-time highs were back here in 2018. And at least if we can go back to the highest point of 2007, that's like, you know, that. So in a way, the Hang Seng still has some room for some upside. We can try to look at it from this perspective. Look at this downside line. Still, okay, if we can overcome this downside line, then yes, more upside. I would go for more upside, but I think we need to deal with this downside line first. Let's jump into the U.S. market, in the U.S. indices. Dow Jones Industrial Average, similar story. Look, we created an all-time high recently, and I mean, talking about that last week on Tuesday, we did an all-time high. We hit this level here, the 46,714, and then we retraced back down. So we retraced back down, we found support here near the 45,785, and we're now bouncing back up. So basically now these two levels become quite important to watch in the near term, because if we clear one of those will determine the next short-term directional move. If we do look, if we do break the lower side here, the support zone, then yes, I'm leaning towards the downside, but only for a larger correction back down towards this upside line, taken from the low of the 23rd of May. If we can get that move, if we can get that, you know, rebound here, maybe we can rebound and push back up. But again, let's go slowly. Let's not rush into things. Okay, let's go step by step. So this is going to be my first target here, this upside line, if we clear the key area of support. So for me, the upside scenario is on a break of the current all-time high on the Dow Jones. S&P, similar story, to be honest. Look, we rebounded. This worked out nicely. I drew this upside line, which is taken from the low of the 23rd of May as well, and we rebounded from it. Look at this. Look how well that happened. So if you're not comfortable with this idea right now, then certainly, yes, keep your eyes on the current all-time high near the 6,000, kind of 699, almost 700, right? So we just briefly did not touch that area. Anyway, look, for now, I'm watching this very carefully, and let's see what's going to happen here next. But again, the same analysis, the same story is valid for the S&P 500. I need to drop below the 6,569 level in order to consider some lower levels. Nasdaq is at a very interesting spot here as well, 24,781. If we can get a nice clearance of that, then yes, certainly I will consider. I'll consider some higher levels, but yeah, at the moment we're stuck, so I'm not really doing much here. I'm just observing the price action. Again, it's a similar story as with the Dow Jones here. I'm waiting for a clearance through one of these levels. Let's jump into German index very quickly. German index showing some positive signs. Look, all-time high. All-time high was reached back here in July. We reached the 24,639, and then we drifted back down. But the bulls are not giving up. In general, what you can see here is a little bit crazy, right? Again, look at the parabolic move. It seems like we're waiting for a catalyst that could drop this, this market very quickly. But at the moment, if we were going to be looking at the technical picture here, I think it seems like a beautiful island reversal. Yeah, let me just confirm that island. Something like this. I'll show you what I'm talking about. So let me just drop it here. So basically, like a little island reversal here. You can see these examples. You can see this bearish island reversal pattern. How to determine that? Well, the one sign you can see, you can get like one of those complex ones here, something like this. But how to see here, why I'm saying that I'm seeing this, because whenever you have like let's say, okay, this is a perfect example. You have like this body of this candle here, and then you have the body of the other candle, the second candle, which is above the body of the first candle, but then the third candle is there, its body is below the second candle body, so you kind of get the second candle, which is higher than the bodies of the first and the third candle. So it's kind of this called like an island reversal. I'm not saying that suddenly you need to start selling, but the fact is that we could see a spike exactly like it shows in this picture here. We could see a spike. We could actually go for an all-time high again. But this would be the kind of the first indication that something is wrong. So again, it's a matter of interpretation, of course. It's very subjective. It's not objective. It's subjective, but certainly something for you to keep in mind. Jumping into the S&P. Oh, sorry, the FTSE 100. The FTSE 100 is 9,400. That's what we're going for. Look at this daily chart. We are knocking on heaven's door again. 9,357. Did we overcome that level? No, not yet. But this is the all-time high, and this is what I am watching very, very carefully. Look at this picture. Look at this picture. We are at all-time highs on the FTSE 100, and I mean, wow. Let's see if we can clear that. Certainly, it looks very bullish because we seem to be forming something of a bullish flag here, but we need a confirmation break. While we remain inside the pattern, we cannot really get comfortable with the upside. And not only a break, we need the body of the, well, in this case, at least a daily candle staying above this area. if we can get that, amazing, more buyers could join in. Let's jump into DXY very quickly, the US dollar index. We had a good run last week. We broke the upper side here, the downside line here, pushed higher. That happened on Wednesday. We pushed further north on Thursday. I was away. I was away on Friday as well. So this kind of, reversed back down. So look, in general, that was a good move. I said to you previously that if we do clear this downside line, I'm going to go higher, and I still stick to my words, because what I'm considering right now is something like this. In general, I said to you that I am still bearish on the US dollar, and I will continue being bearish, at least for now. Again, I don't believe that, these impulses here, again, I only see them as impulses, and we had a good run to the upside because now we broke this downside line, and somebody might say, hey, maybe it was a little bit of a tentative downside line, and I will say, hey, you probably are right, because maybe we should be looking at another downside line, which is this one. You see, this is all subjective. It's not very objective, it's subjective. So you cannot really say that, I'm right and you're wrong or something like that. We see things differently, but we're trying to make, some sort of, sense out of all this. That's why, like I said, that's why we're speculating. That's why a lot of people are speculating. That's why it's interesting in this market. Like, everybody thinks differently, and that's how we build the market. So, long story short, for now, I will continue aiming for the upside, but only right now at this point, only towards this downside line taken from the highest point of May of this year. If we can break that downside line, then yes, great. I'll consider a move. A move to the upside. For now, yes, there is, like I said, there is a little bit of room here for more upside. Then we can take it from there. Let's jump into the Forex world and White Castle. I hope you're still with me here. Let's jump into the Forex world and see what's happening with that yen. But first, let's have a look at what Australian dollar. Look, interest rate decision. We're expecting a no action there, so that might be seen as a positive for the Australian dollar, and hey, maybe we could see a bounce back up here. But again, a lot will depend on the US dollar here as well, because at the moment it's a little bit of a mess here. It's not a very attractive chart, I would say. It's just kind of, it's messy. It's not, there's no clear direction. Somebody might say, oh, but he's to the upside. Yes, we're creating higher lows. That is true. But now we're after creating this higher high, we are shifting to the downside. We found resistance near the 0.6707, and we are now correcting back down. So maybe even actually we could end up traveling all the way here towards this upside line. But for this move, I would need to see a drop below the 0.6520, and then we could just take it from there. AUDJPY. The yen, the Japanese yen. Look, in terms of the elections, I think that we could see a little bit of a shakeup here and there, but I think that the Japanese yen will remain subject to the global developments in the world. Because if suddenly everything shifts to risk off, when the stock market starts, shifting lower, then I think the Japanese yen will pick up traction, and whatever politics, no politics, election, no election, it doesn't matter in that case. Everybody will shift to Japanese yen as a safe haven, and we'll see, a drift lower. I think we're more interested in what's going to happen with the interest rates of the Bank of Japan. Are we going to go in October? Are we going to go for that rate hike? And for now, let me just remind you that currently we are seeing we have a plus 0.5% interest rate on the BOJ from the BOJ, but at the end of October they're expected to hike by 25 basis points. So meaning that we could see an improvement in the Japanese yen. So for now, until then, I'm actually gonna consider some weakness in the Japanese yen. I'm gonna consider, I think we could see this moment here where actually, it could be good news, in a way. So if we clear the interest rate decision could be a positive event, you know. So we'll see how that plays out. Certainly, the politics can get in the way. Don't get me wrong, because we know that the new government in a way, and whoever they're going to be, you know, they might be in favor of lower rates, which means that, you know, for them politically, it's they will show that lending has not increased. You know, they're managing their, you know, because they will blame, you know, people will blame the politicians and everything, not the central bank. So they will try to also persuade the central bank not to maybe go for those for that rate hike. But again, we'll see. So for now, long story short, if I'm looking at AUDJPY here, I need a pop above the 98.42 in order to go to the upside here. And by upside, I mean the psychological 100 level. Let's jump into very quickly, actually NZD-JPY, that continues to slide. This NZD-JPY is in an interesting spot. Here, it's not the strength of the Japanese yen, it's more the weakness of the New Zealand dollar, because if you look at AUD-NZD, that one's to the moon, honestly. Look at this move here. Look at NZD, you know, devaluating against its neighbor. 1.1490. I think that's could be quite doable. We're not far on AUD-NZD, so let's see if we can reach that area. Let's jump into EURUSD very quickly, ladies and gentlemen. EURUSD, we're just bouncing around here, not much action. Look, I don't like formations like these. For me, they're like not clear enough. Maybe we can try to do something like this, you know, but again, it's very subjective. It's not really objective. So maybe it's this way, maybe it should be maybe like from here, you know, like again, like this is, yeah, I mean, okay, we broke this upside line, but we found support near here. So who am I to say that, you know, this is more important than this, or, you know, that's like I said, that's my problem with this. So I tend to follow the Dow theory and just go for higher highs or lower lows. Trend lines are important for me just to kind of confirm, you know, a direction or something like something like an area possible target or something like that. So look, if we're looking for some higher levels, first of all, let me get rid of this. If we're looking for some higher levels, then I'm waiting for a break of this downside line, and if we can get a nice break of that downside line, then I will consider a move towards the 1.1919 zone, somewhere around here. In general, the euro is on the stronger side right now. Certainly, it's enjoying the moment. For the Europeans, it's cheaper to travel to US for holidays now. Hey, eventually, you know, it ends. So I think that 1.20 is still somehow on the target. It still is a good target, but first we need to clear this downside line, and then we can do something about this. If we're looking at some lower levels, look, for now, I would say a drop below the low of last week. I think that could help here a few more bears to the side, and we could see a move maybe towards this this little area right here near the 1.1391. Let's jump into EUROJPY. Beautiful reversal. Look at this. Look at what's happening here. We're getting a nice reversal. I think that I'm watching. I don't think, but I do think, but I'm watching this 173.90 zone, and I think that this is a good area for just a little hold up or something like that. It was a good area for resistance. Let's see if it can take the role of good support. If at the same time, if we do break this hurdle, I don't believe that we're gonna suddenly, you know, shift very heavily to the downside. But I would prefer to wait for a break of this upside line actually, and then, you know, get a little bit more comfortable with the downside. At the moment, we're being very careful here, and at the moment, I am watching like something like this basically, but that could potentially happen. EURUSD. I mean, look at this. We surpassed this barrier. The psychological 2, we continue to rally. Then going into a little bit, you know, bigger numbers here. So I talked about this monthly chart on EURUSD, and I will stick to my words and I'll stick to my game here that these major spikes, when these happen, we get some sort of a market crash in a way. So look, we had some, problems here. Or either it's sometimes, it can be in between. Let's say again, these we do get market turnarounds. This 2000 here. This is here. This is here. Oh, by the way, I just figured out that this here, when I was looking at Nikkei, just this is from here, from 1990 to this is two decades, not 1 decade. This is me failing on math right now. Anyway, Euro NZD. So here, like I said, this is the problem here, the financial crisis here. There we go, boom to the downside. 2015, yep, also a little financial crisis. 2020, of course, COVID. Now we're getting to some sort of thing as well. It seems like that. Let's see. So look, on the monthly chart, I'm aiming for this this upside line right here, which could be an interesting one. And if we can get a nice test of that area, I'm wondering if we can actually go further north, because I think maybe a little bit of a rejection back down, or we could see a little bit of a rejection. So let's see what's going to happen. We're going through some interesting times right now, ladies and gentlemen, but certainly, yes, prepare yourself for something interesting. Let's jump into EURUSD very quickly. This one, looking at the daily chart. Okay, came very close to find good resistance here, and then we started reversing back down. Okay, look, very quickly on GBPUSD, and then I'll jump into USDJPY. GBPUSD pushing back up, a little bit of a mess here, to be honest. Look, for me, the downside scenario probably will come on a drop below this 1.33 zone. For the upside, honestly, it's difficult here. Maybe here 1.35, 36, but then certainly, yes, it's a bit of a problem. Yeah, I mean, we could keep an eye on this, certainly, but I think that this is the downside line that I'm going to aim for. USDJPY very quickly, because I need to still jump into gold. USDJPY looking interesting, drifting back down, and certainly at the moment the Japanese yen is picking up traction, but I think it's more of a weakness of the US dollar. This upside line, we're watching this one very carefully. I think it could be an interesting line to watch, because if we do travel all the way down here, maybe we could rebound from this area, But for the upside, okay, there is still room. Are we forming something of an ascending triangle pattern? No, I don't think so, because we have a little bit of a gap here, so it's not really working out well. Are we forming something of a rising wedge? Could be the case. So according to all the TA rules, rising wedges tend to break to the downside, but again, we need a better one right now, but it's not the most attractive one at this point. So we're keeping an eye on that one. Look, USDCHF, a copy of DXY in a way, but certainly still an interesting one if you're trading the Swiss franc. So you're probably trading, against the US dollar or the euros, or the euro. Anyway, for now, the fact that we are seeing interest rates in Switzerland not going nowhere, we are seeing inflation also struggling to pick up. So I think the Swiss franc will remain somewhat strong, but just because of the weakness of the US dollar. And let's jump into the commodity world very quickly, ladies and gentlemen. Commodities, gold, I mean, as we speak, all-time highs are being hit. So today we hit an all-time high again, 3,819, almost 20. Wow. Look, I talked about this. I said before, and I'll say it again. Am I going further north? Yes, I am. I talked about the 3,800 last week. I mean, I said I think that's already in the bag. So what I'm watching here next is basically the 4,000. This is where, if you draw the Fibonacci this way, the Fibonacci extension, then you will see that this is drawn from the lowest point of April to the highest point of April, and then to the lowest point of May. And you see that the 161.8% here is near that psychological 4,000. So is this doable? It is. Is this doable by the end of this year? Sure. We're expecting lower rates, interest rates from the Fed. That's already like a, a support for the for gold, for investors to jump into gold. Is this okay, I don't want to use the B word, the bubble, but is this a bubble? Nobody knows, first of all. But this cannot really fly, like this parabolic. It needs to correct lower at some point. Are we now? If you remember, like we were talking about 3,000 level in the beginning of this year. I mean, that was like sounded like wow. Now we're talking 4,000. I mean, look at this. This is crazy. And look, I talked about gold already, and you can have a look at the video that I created. Watch this if you're trading gold. So keep your, you watch this video. I talked about it. I talked about it already, and honestly, I think it's better for you to just jump into this video and watch it, and to kind of get my perspective on gold. But for now, and I would say this way. What comes up must come down eventually, right? The only thing is the question: are we gonna hit that 4,000 before dropping lower, or is this going to be a little bit of a tease? We might actually come closer to the 4,000. Everybody's going to be aiming. Whenever everybody starts aiming for something, then you can see the market sometimes making tricks, doing some tricks. So be careful with that. Now, silver, in terms of silver and in terms of the 50 level. Now that I am still a believer. I think the 50 could be a good target here. Again, also parabolic, very parabolic, but it will come down. I think it will come down. So let's just keep an eye on it, and then we'll go from there. Platinum as well, another one. Look at this, platinum, boom, to the upside. Palladium pushing higher, but palladium still has potential. Look at this. 3,000 on palladium, that's doable. So we have been here, and the question is, are we going to go here again? Well, it's a matter of time, of course, but this was back in 2021. This whole decline took us, 3-4 years. The all-time high on palladium was here. So that means 3,433. So that means that there is room for palladium to go higher. And if you're asking me, what I'm seeing here on the monthly chart, I'm seeing a double bottom with a neckline being here. And what's happening right now with the neckline? We're clearing it again. We cleared it in July. We failed to stay above it. We are now in September. 2 days left until the end of September. We're still above this hurdle, above this neckline. My question is, if we see the body of the daily candle, of the monthly candle, actually even better, it's like a monthly candle. If we see this one staying above this area, to be honest, I'm kind of leaning a little bit more towards the upside. So let's see what's going to happen there, ladies and gentlemen. Okay, so very quickly on coffee, and I'm going to be wrapping this up. Where's my coffee? Yep, there we go. We had a good run here. Rebound back up, a bit of a retracement here. So after this little decline, so we retraced 38.2. So again, try to retrace 50. I think they're still doable, but then to be honest, I don't know if it's going to go to that 50, because we have the a good resistance area around here. I'm not going to say anything yet, but I'm currently considering maybe a little bit of a retracement back down. Very quickly on, let's jump into crypto, Bitcoin. My 112 zone, which I strongly talked about, is the new norm of some sort. Like, it's the level that it kind of keeps on oscillating, and I love this level. The 112, love it. And what I'm seeing here right now is I'm still gonna, although we have violated it a few times, I'm still gonna keep that. I'm loving this level. It's like some sort of a median right now, and it's kind of, we're oscillating around that area, and basically, look, we're getting into a bit of a squeeze. And the 112 is becoming that little barrier. We will see where we will end up in relation to that 112. Are we going to be above it or below? For now, I think that take yourself a little bit of a pause and just observe this price action on the daily chart here. Keep your eyes on the 112. And look, if you're really cautious and you're really, let's say, risk averse, A drop below the 107 territory could do the trick here for a few more sellers. For the buyers, a push above the 118,000 zone here, that could, you know, spark some interest among the buyers, and we could travel to the all-time high again. Bitcoin Cash. Oh, my voice is going down. Bitcoin Cash. We are seeing reversal back up here, but look, I think we have something like this here that's providing support, so keep your eyes on that. In general, I think, again, maybe we're having a channel, something like that. So maybe it's a channel, but it's not a very clear one, so I probably am not going to draw the upper sign. So for now, I'm just going to keep an eye on this. If we do fall below this upside line, ladies and gentlemen, and we do fall below the recent lows here, the low, the 533 territory, yep, I'm going to consider a move to the downside. Ripple, we're hugging that 3 level, we're oscillating around that 3 level, and look, if we push back above the 3, I'll become a little bit more positive. It's like with the PMIs, 50, right? For Ripple, it's like 3. If we, you know, if we're in below 3, we're like in contraction territory. You know, if we're above 3, we're in expansion territory. So that's how I'm approaching a Ripple, without any, honestly, without any little background going into deeper into. I know the technology is great. I know that there is interest from, you know, financial institutions in Ripple, and certainly that's, you know, that's all positive. But if we're looking at it from the technical perspective, yes, like I said, I'm treating it almost as like a PMI. Ethereum, okay, we're pushing back above this little hurdle. Okay, that's great. 4,000 zone, we're back above 4,000 zone, and in a way there is a chance for this one to actually drift higher, but let's not get our hopes up yet, because again, the upside could be limited to this downside line taken from the highest point of August. Litecoin, okay, this one is at a very interesting spot here as well. Downside line, there we go. Then we have this right here, this 106.5 zone, which we're watching. I think in general this 106 territory, I think if we were going to end up being below it, I'm going to lean towards the downside. But if we suddenly, you know, if we also drop below the 200-day EMA here, shown as the white line on our daily chart, yep, I'm going to get a little bit more bearish. Dogecoin, what's happening here? Dogecoin, actually, you know, Dogecoin. Let me just jump into that one. Yep, I think this one's better here. No, it's not better. It's yeah, there we go. That's the one. This is what I need. This is what I need. So Dogecoin, right? Okay. Is it a channel? Maybe, I don't know. Let's see if this is a channel. Not a very nice one, to be honest. I think it's more of a rising wedge. Yep. Unfortunately for the bulls, maybe, like I said, it's more of a rising wedge. So according to all the tier rules, such patterns tend to break to the downside. So yeah, could be a bearish indication for now. Polkadot, the last one for dessert, we fell below 4. No, wait, this is the wrong one. Just a second. Polkadot, where's that? There we go, that's what I need here. Oh, and while I'm here, Dogecoin, crypto, that's the one. So while I'm here, there we go. And look, Polkadot, we're below, there we go, that's the one I need to chart. Polkadot, we're below 4. It's a bearish indication, and we look, at one point we were like knocking on the doors of 5, and there we go, we kind of drifted back down. So I'm very careful with Polkadot right now. It could be an interesting option, but certainly just a little bit more on the cautious side. This is upside line, it's very tentative, but to be honest, it has a few touches, important touches, so might as well keep an eye on this upside line if we're trying to find some sort of logic in all this. Drop below the 3.77 territory here is an interesting moment here as well. So let's see what's going to happen here. And for now, I'm watching these levels on the downside if we break the upside line. Yep, period. For the upside, well, maybe a move above this inside swing low here of the 15th of September near the 4.10 zone could do the trick for a few more buyers, and we could, consider a move higher. But for now, we're very close to this area, so let's see. We know if we can stay above this upside line and this the lows of last week. Ladies and gentlemen, that is a wrap. I will have to wrap it up here. Thank you very much for your patience, and thank you very much for sticking around with me. Ladies and gentlemen, I hope you found it useful. As always, look, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Don't forget to like and follow and subscribe, and don't forget that on Wednesday there's not going to be a session. I will resume on Friday, but in between, you will see, just like I said, subscribe to our channel, and I'll do a few little separate videos, the top news videos on the top news this week. So hey, hopefully you like those. Thank you very much, and I shall see you later. Bye-bye.